What if the microchips, the ones in your phone, your car, even our critical infrastructure, what if they weren't just components anymore, but actually powerful symbols of American ingenuity and, well, national strength? Welcome to the deep dive. We try to cut through the noise, get right to the core of what's important.
Yeah.
And today we are definitely unpacking something monumental. It's America's really aggressive push to reclaim its manufacturing might.
That's right.
Specifically focusing on those tiny but incredibly powerful semiconductor chips that, they drive everything now.
They really do. And look, this isn't just some, theoretical chat about industrial policy.
No.
We've seen something truly fascinating pop up recently. Reports surface, right, that the Trump administration is actively considering taking a 10% stake in Intel Corp.
A 10% stake. Wow.
Yeah, and this isn't just giving them a grant. It could mean actually converting billions in federal help under the CHIPS Act directly into government equity.
So the government becomes a major shareholder.
Effectively, yes. In one of our most vital tech companies, you might have even caught it, Intel stock jumped, like 4% after hours when that news hit.
Okay, that's where it gets really interesting, isn't it? Because, this isn't your typical government subsidy program.
Not at all.
This proposed move, it signals a really profound shift. People are calling it a hawkish approach to industrial policy.
Hawkish,
It feels like a very assertive stance aimed at ensuring national security, technological dominance, maybe even, potentially pushing aside some traditional free market ideas we've often held up.
Right. It's direct government involvement, really stepping in to secure a vital industry.
So the big question then is, what does this aggressive new strategy really mean for you, for the economy, and, well, for the future of American manufacturing?
Yeah, good question.
Before we dig into the policies themselves, maybe it's worth just pausing for a second. Let's appreciate how fundamental these chips actually are.
Absolutely essential.
People call them the lifeblood of modern technology, and it's not really an exaggeration, is it?
No, think about it. Everything advanced, the AI in your phone, self-driving cars, 5G, 6G networks, critical medical gear, even our most sophisticated military systems.
All running on chips.
Every single one relies on these tiny, tiny marvels. Modern chips can pack tens of billions of transistors, billions, in a space smaller than your fingernail.
That's just mind-boggling.
It is. And that complexity, it's not just about power. It means the manufacturing itself is incredibly delicate. It's proprietary, needs these special factories, fabs, they call them.
Right, the fab.
Which can cost tens of billions of dollars just to build one.
Wow.
And here's the kicker. America actually invented the semiconductor over 65 years ago.
We invented it.
Yet, our share of actually making them globally plummeted. We went from, 37% in 1990?
Almost 40%.
Down to just 10% by 2022.
Only 10%. Why such a drastic drop?
Well, it was largely because other governments stepped in with massive incentives. Big tax breaks, direct subsidies, cheap land.
Yeah.
Anything to attract the manufacturing.
So they created an uneven playing field.
Exactly. Put American companies at a real disadvantage for actually building the things here.
So we basically outsource something critical. Maybe we focus too much on short-term cost savings instead of long-term security.
You could certainly argue that. But despite that drop in manufacturing, it's important to remember the U.S. industry still leads the world in design and R&D.
Right. The design part is still strong.
Very strong. We hold over half the global market share in sales. That was $264 billion in 2023. And these chips, they're America's sixth largest export, over $52 billion last year.
Okay, so we design them well, sell them well, export them, but we weren't making enough of the most advanced ones here.
Exactly. That reliance on foreign countries for the physical production created huge supply chain risks, especially as, global tensions started rising.
And that vulnerability, that's the core reason for this shift, isn't it? This move towards what people are calling techno-nationalism.
Precisely. And it's not just about economics. It's a strategic idea, right? That a nation's tech strength and self-sufficiency are just as vital to its security as its military might.
So it means actively using policy to link tech independence with national security, with economic prosperity.
You got it.
And interestingly, this wasn't really a partisan thing. Back in 2020, you had the Trump administration and Congress working together, bipartisan action, to push the CHIPS Act forward.
A generational commitment, they called it.
Right. And then the Biden-Harris administration came in and essentially doubled down on this whole Made in America idea. They used funds from the Bipartisan Infrastructure Law, the Inflation Reduction Act,
to pour even more fuel on the fire.
Yeah.
So you see this strategic continuity, which is pretty interesting in itself.
Yeah, it really is.
And the scale of this public money is just...
Well, it's huge.
The Cheap GPS and Science Act alone, nearly $53 billion set aside for semiconductor manufacturing, R&D, workforce training.
$53 billion. That's serious money.
It is. And that public investment has already acted like a catalyst, right? It's spurred over 90 new manufacturing projects across 28 states.
Wow.
And those projects have brought in announced private investments of nearly $450 billion.
So the government money is bringing in massive private money alongside it, crowding it in, as they say.
Exactly. It shows how targeted government action can really encourage the private sector to step up in a big way, far beyond that initial public spending.
And the projections based on this are pretty dramatic.
They are. The U.S. is expected to more than triple its semiconductor manufacturing capacity between 2022 and 2032.
Triple it.
Triple it. That's the highest growth rate projected anywhere in the world during that time.
And what about the really advanced chips, the sub-10 nanometer ones?
Yeah, those are crucial. Our share of making those is forecast to hit 28% by 2032. Compare that to just 9% if the act hadn't happened.
So a huge turnaround, reversing decades of decline.
A profound reversal, absolutely. And this isn't just about fancy new factories, right? It's about jobs, good jobs, here at home.
How many are we talking?
Well, the projections are for tens of thousands of direct jobs. Over 55,000 in manufacturing, another 100,000 in construction, just to build these places.
And that ripples through the economy.
Oh, yeah, supporting hundreds of thousands more jobs in related industries. And get this, for every single dollar the federal government invests in semiconductor R&D,
Yeah.
it's estimated to boost U.S. GDP by $16.50.
$16.50 return for every dollar spent on R&D.
That's the estimate. It's an incredible return on investment. Really shows the power public capital can have when it spurs private growth like this.
And it's not just chips, is it? This whole Made in America push, it's broader.
Much broader. Take the Buy America rules. Federal funding that's covered by these domestic content rules, it jumped 5 times, fivefold.
From what to what?
From an estimated $59 billion to $324 billion.
Wow. So basically, when the government spends money on big projects, way more of the materials and labor have to be American now.
That's the idea. For federal procurement, that domestic content requirement, it's already gone up from 55% to 65%. And it's set to hit 75% by 2029.
That's a really fundamental shift in how federal dollars get spent, aimed squarely at boosting our own industries.
Exactly. And we're seeing that crowding in effect across the board, not just in semiconductors. Since January 2021, over $1 trillion in private sector commitments have flowed into U.S. manufacturing and power sectors.
$1 trillion.
$1 trillion. And manufacturing construction spending, more than doubled in that time. It shows this isn't just wishful thinking. It's triggering real investment.
Can you give an example outside of chips?
Sure. Look at EV chargers, fast EV chargers. Just 3 years ago, we made almost none domestically.
Right.
Now, thanks to $7.5 billion from the infrastructure law and those domestic manufacturing rules, there are 40 announced or opened factories.
40 factories building a whole new industry here.
Literally from the ground up. Or think about high-speed rail. The infrastructure law put $66 billion towards rail. Projects like Brightline West, that's the one connecting Southern California and Vegas.
Yeah, I've heard about that.
They estimate over 95% of their direct spending will be on American products and labor. That alone could create 35,000 construction jobs.
And didn't Siemens make an announcement related to that?
They did. Big win. Siemens is actually moving its railcar manufacturing to the U.S., to a new facility, specifically for this kind of project.
So it's about bringing production home, strengthening supply chains, creating jobs across multiple important sectors.
That's the goal, bringing it back home.
Okay, so there's clearly incredible momentum, some real wins happening, but it can't all be easy. There must be challenges.
Oh, absolutely.
Yeah.
Significant challenges remain. First and foremost, the workforce.
The skills gap.
Exactly. A study last year projected a shortfall of 67,000 technicians, computer scientists, engineers, just in the semiconductor industry by 2030.
67,000 short in just one industry.
And if you look economy-wide, the projected gap is 1.4 million skilled workers.
Whoa. That's a massive number. That could really slow things down, couldn't it?
It absolutely could. It really raises the question, how on earth do we fill that gap?
Yeah, how?
Well, we definitely need more STEM graduates from our own schools, our universities, technical colleges. But just as important, maybe even more so, are policies that attract and crucially keep Top engineers and scientists from other countries.
Retain them.
Yes. Our current immigration policies, frankly, often make it really hard for highly educated foreign STEM grads to stay here after they study here. We train them, then often force them to leave. That talent goes elsewhere.
That seems counterproductive. Okay, what else? What other hurdles?
Well, there's tax competitiveness, still an issue. The U.S. lags behind a lot of competitors on R&D tax incentives.
Like who?
Well, China, for example, offers this staggering 220% super deduction for semiconductor R&D.
220%? What does that even mean?
It means for every dollar a company spends on R&D there, they can deduct $2.20 from their taxable income. It's a massive incentive to do your innovation there.
And what do we offer?
That's the thing. The U.S. is currently the only major region that doesn't have a specific enhanced tax incentive just for chip design or R&D.
Really? The only one?
Yep. Plus, that advanced manufacturing investment credit that came with the CJPS Act. It's set to expire in 2026.
Oh, that's soon.
It is. And that uncertainty threatens the long-term investments we need companies to make right now.
So connecting this to the bigger picture, it's about making sure U.S. companies can actually compete globally.
Exactly. I mean, 75% of U.S. semiconductor revenue comes from overseas sales. But get this, American exports actually fell by almost 16% from 2022 to 2023.
Exports fell even with all this focus.
Yeah, and meanwhile, you've got China with its whole Made in China 2025 plan. They just launched a new $47.5 billion national fund. They're pushing aggressively for chip self-sufficiency and dominance.
So it's not just about making chips here. We need smart trade policies, too.
Absolutely. Policies that open up global markets for the chips we do make here, and policies that push back against unfair practices from countries trying to corner the market.
Okay. Workforce, taxes, trade. Any other big ones?
One more perennial favorite.
Yeah.
Regulatory burdens.
Red tape.
You know it. Streamlining complex environmental rules, energy regulations, those often incredibly long and complicated permitting processes. It's crucial.
You need oversight, obviously,
But the current complexity can cause huge delays, add massive costs, and sometimes just stifle the very innovation and growth we're trying to encourage. It's finding that right balance, which is always tricky.
So what are the experts, like the industry itself, saying needs to happen? What are the recommendations?
Well, the Semiconductor Industry Association, the SIA, they have some pretty clear ideas. They're strongly urging Congress to extend that advanced manufacturing investment credit beyond 2026.
Keep that going.
Yes, and critically expand it so it also covers chip design and R&D, not just the manufacturing part.
Incentivize the whole chain.
Exactly. They also want to bring back the ability for companies to immediately deduct all their R&D expenses from their taxes, permanently, and maintain something called the Foreign-Derived Intangible Income Deduction, or FDII.
FDII. What's that do?
It's a bit technical, but basically it's a tax incentive designed to encourage companies to keep their valuable intellectual property think patents, designs registered here in the U.S., instead of moving it offshore to lower tax places.
Got it. Keep the brains here, too.
Keep the brains and the profits from those brains here. Beyond taxes, the SIA is also pushing hard for robust funding for federal research programs.
More basic research.
Yes, funding them at the levels Congress actually authorized. Plus, expanding those skills training programs to tackle that workforce gap we talked about.
Right, the training piece is huge.
And, like we discussed, advancing targeted immigration policies, making it easier to attract and, importantly, keep top global talent here.
Makes sense.
And finally, promoting those smart trade policies. Increase global demand for our chips, but also actively counter unfair practices, especially from nations like China. The goal, as they put it, is to make sure U.S. companies can outcompete, out-innovate, and outflank rivals globally.
Outcompete, out-innovate, outflank. Okay, so let's circle back then to that news that really kicked off our deep dive today.
The potential Intel stake.
Yeah, the report that the Trump administration is considering taking a 10% equity stake in Intel. That feels like a perfect example of this hawkish industrial policy in practice, doesn't it?
It really does. It's the government not just incentivizing, but actively seeking direct ownership in a critical private company.
So just to be clear, this wouldn't be giving Intel money on top of the grants. It would be converting some of that $10.9 billion in federal grants they're already slated to get.
Converting a portion of it.
Into direct government ownership, which, I mean, potentially makes the U.S. government Intel's biggest single shareholder.
It potentially could, yeah. Which is certainly an unprecedented step for a tech giant like Intel, at least in peacetime.
Has anything like this happened recently, even if not at that scale?
Well, it's not entirely without precedent, actually. The Pentagon, fairly recently, took a $400 million preferred equity stake in a company called MP Materials.
MP Materials, what do they do?
They're a rare earth producer,
Hmm.
critical minerals, and that stake made the U.S. government their majority shareholder.
Ah, okay. So there is some precedent in critical resource areas.
Exactly. And the thinking behind the potential Intel move is pretty similar. It boils down to securing access to critical technology, right? Especially with China pushing so hard on its own chip plan,
National security.
national security, and also maybe trying to speed things up. Expedite crucial projects, like that big Intel factory planned for Ohio, which has apparently faced some significant delays.
So the government wants to make sure these critical capabilities actually get built and built quickly. Taking a stake might give them more leverage to ensure that happens.
That could certainly be part of the calculation, yes. More direct influence.
Okay, so we've really covered a lot of ground here. We took a deep dive into this ambitious American industrial strategy, zeroing in on the absolutely vital semiconductor industry.
We did. We saw how these strategic public investments, led by the CHIPS Act, are sparking hundreds of billions in private capital.
Creating tens of thousands of jobs, projected to more than triple our domestic chip-making capacity. A huge shift.
But we also uncovered the very real challenges that are still out there. Big ones. Skilled worker shortages, global tax disadvantages, fierce competition, especially from China, which is pouring money into its own chip ecosystem.
Definitely. And that potential government stake in Intel, it really highlights this broader move towards a more assertive, you could say hawkish, industrial policy, all aimed at locking down national security and technological leadership in, well, a pretty rapidly changing world.
That sums it up well.
So as America pushes forward in this global technology race, maybe the thought to leave you with is this. How will this new era of Made in America industrial strategy redefine that fundamental relationship between government and private industry? And what changes might it ultimately bring to your everyday life as the nation really seeks to rebuild and reclaim its manufacturing future?